consistency.
Right. A lot of agents will have the scarcity mentality of, oh, I only have these resources, so I can't afford, I need to do it myself. But you can't do it yourself because there isn't enough time. And so you have to spend to get that. And then there's also that tail, right? 4 weeks for sale, for, whatever, maybe it's 2 or 3 weeks, 4 weeks to find a candidate. So they don't see the instant return. They turn off the flow of the cash to that strategy too early. We see it over and over and over again. And it's hard. I mean, I get it. There can be thin margins at times, but you have to put it in to get it back out. What do you
100%.
What do you see as the biggest mistakes that agents make in the hiring process?
Well, I mean, that's where we really took a different approach to this, where we don't come in as a third-party vendor. We try to come in, we pride ourselves in, we typically get the job done in a third of the time, a third of the cost, but we don't want to be a third-party vendor, but more of an extension of their brand.
Yeah.
And how we do that is we come in and we'll first and foremost shore up the hiring process, because that's one of the most common things. Even though we're in one of the most challenging and most difficult job markets we've ever seen, one of the biggest hurdles we see out there is maybe the foundation not being where it should be. And that's where we develop our 3 C's. So we start off the process by coaching and consulting the person that we work with, our client that we work with, to really get a good understanding. And we go through the 3 C's that we came up with. The first C is compensation. We've done dozens and dozens and dozens of exit interviews with candidates. Why didn't you take the job? Why didn't you show up? Why did you ghost? Why did you not fill out an assessment? And literally 98% of the time, it came down to the 3 C's. Compensation being one of them. Make sure you're competitive in the marketplace. Great people don't cost money. I'll say that again. Great people don't cost money, because great people produce, and when they produce, they're making you money.
Yep.
But you have to pay great people great. And you have to make the right investment for the right person. And at the very, very least, be competitive for your job. Like, you can't come in with a $30,000 base or a $24,000 base and say, hey, sink or swim. You're not going to pick up the talent that you want to.
Right.
And sometimes there's interesting ways that you could do. Is like, hey, I got this person. They're making X, Y, Z. I don't know how I can afford them. Well, maybe what you do in the first 60, give them a very, very lucrative incentive plan. And maybe in the first 60 to 90 days, match their base pay at their past employer. So you're giving them that ramp up time, and it curates that fear and anxiety. I can't afford to possibly not make anything and not pay my mortgage, but I know I'm getting a predictable income until I become skilled at this job. And to make it very abundantly clear that, a lot of places you go, you can do very, very well in this industry. Again, paint that picture of the long-term career path.
Right.
And what I'm willing to do is something most people aren't willing to do for you. I'm not only going to invest in you and your license because I believe in you, but you come aboard, you get licensed, I'm going to guarantee you your pay for the next 60 to 90 days. And that's somebody, if you got somebody really dynamic, really skilled, and you're in that place, you can't afford it without guaranteed results. That's a great way to do it, mitigate your risk. But you gotta, whatever you do, you gotta make sure your compensation plan is competitive. And then 2, you gotta make sure that your compensation plan is simple. So I'll see too many times, it's maybe like 3 pages, 4 pages, 5 pages long. And imagine like somebody from outside of the industry coming in and getting a 5-page comp plan that has all these different nuances that makes sense to us in our brains, because we know the insurance industry, like, you got to do this is a qualifier, this is something you got to do daily. But they bring it home to their spouse when they're like just getting like a 1-sentence blurb from Google that says you're making X amount a year and then you make this kind of bonus. But then they bring like a dictionary home to their spouse. This is how I get paid. I'm going to make a lot of money. Well, you're probably not going to garnish the confidence that you need from the candidate, but you're certainly not going to accomplish the garnishment you need, confidence that you need from the spouse when they come home and try to articulate it.
Right.
So I say keep it simple, keep it 1-pager. And, I highly recommend, again, having compensation plans that are highly incentivized off performance, where they can make a lot of money if you're making a lot of money. But map that out. If you come in and just hit my bare minimum expectation, you're like a bare minimum kind of guy or a bare minimum kind of girl, this is what you're going to make on a monthly and annual basis. If you come in and you're average, so you come in and you just operate at average in terms of what interpret average in an organization, this is what you can make monthly, this is what you can make annual. If you come in and light the world on fire, this is what not top people are doing in my agency, think outside your box. This is what top people are doing in my state to show you what is possible. You got to work hard for it, you're going to have to grind for it, but you can make 6 figures plus if you do that. You tell me though, are you a minimum expectation kind of person? Because I know that's not the reason I'm hiring you today. Are you average, or are you going to light the world on fire when you come to work for me? And then basically whatever your